infrastructure is the bedrock of a strong economy. The onus of creating it and maintaining it lies with the government. Often the government would do it on its own, and sometimes it would create an environment for the private sector companies to participate. The recently announced National Infrastructure Pipeline envisages to spend almost 100 lakh crores over the next 5 years, and this is going to be double of what we spent over the previous 5 years. Even when we see the union budget, which was announced very recently, we notice two big changes. First, the fiscal deficit as a percentage of GDP, which had been coming down from about 4.5% to 3.5%, has gone up to 9.5% this year, remains high at 6.8% in FY22, and glides down slowly to 4.5% by 2025-26. Also, when we notice the mix of overall expenditure by the government, a 13% allocation towards capex is going up to 16% the next year. And a dominant part of this additional spend is going towards roads, railways, water, and urban infra. Invesco India Infrastructure Fund is such product which stands to benefit out of the investments in these sectors. Having learnings from the gold rush of 19th century, where we believe the shovel makers end up making more money, the companies which are into contracting and those companies which provide materials to such companies stand to benefit more. This fund has more than 2/3 of its investments towards these companies. Additionally, when we look at the valuations of the BSE Infra Index compared to the leading indices, we notice that the Infra Index trades at a discount both in PE and price to book ratios, giving a good opportunity for investors over the medium to long term.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.